So I'm going to leave this open, and I guarantee you I'll be liquidated by the end of this call. Now, I will say I was liquidated.
So clearly, Sol's not a good asset.
Look at me. Look at me. This is full circle.
It's an Ouroboros.
Yeah. Yeah, I am my own exit liquidity. Welcome to today's episode of the Dojo Pod. Joining me today is my co-host Mara, and maybe Patrick will join a little bit later, but because he's not here yet, I want to dig into the stuff that I am super nerdy about, which is yield. So, yeah, I mean, we could talk about price, but I don't want to bore you with that. You know what the charts are doing. You've seen it. We've been in the chop for weeks now. I recently, as of yesterday, found what I would consider a hidden gem, and I want to show you guys this hidden gem. Now, it doesn't have a lot of liquidity, but it is really cool. Mara, you've played around with RateX before, right?
I played around with it a little bit, but I'm very interested to hear what you're doing. You're messing around with one of my new favorite assets, which is JLP, I think. Can you we talked about this in the show a couple weeks ago. I don't think we ever talked about an answer on here, but can you just give a breakdown for everyone of how JLP works on RateX? Because it is a little bit different than it works in the wild, so to speak.
Yeah, I mean, it's definitely confusing. Let me pull up a chart of JLP just to show you guys what it is and what it's not. So, don't look at that chart. I don't know what the heck that is. JLP, no. JLP volume. Let's go with the 2 million one. That's probably what I want. It's a nice chart. Yeah, okay. This is the chart that I love. Okay, so JLP, beautiful chart, right? You love this chart. Anyone who's ever been TradFi would love to long this chart. And
just real quick, funny note, one of our fellow members of the DeFi Dojo, Groot, who is our TA expert extraordinaire, sometimes when I'm feeling a little petty, I ask him to help me do TA on this chart. And I don't think he fully, bless his heart, I don't think he fully understands what it is. He's a big TA guy, not a big DeFi guy. And so I'm pretty sure he thinks it is a honeypot rug pull type situation, which it looks like. Legitimately, this looks like, a silly up-only chart. Charts are not supposed to look like this. There has to be pullbacks. And maybe, knock on wood, hopefully it doesn't happen, but maybe it will happen in JLP one day where Solana will crash or there'll be something. But so far, if you look at the history of that asset, it is pretty much up and to the right with a bit of volatility. So it's a great asset.
Yes, and we talked about why this is the case. I won't bore you guys with too much rehashing, but currently last week, this APY was 63.54%. I say last week because basically they put on the front end the APY of the previous week, and this was updated 6 days ago, so we'll probably get an update tomorrow. And that APY is intrinsic to the value of the asset, which means the asset increases in value at that rate. It also has delta exposure. So you can see currently JLP is composed of 45% Solana, 10% ETH, 11%, roughly 12% Bitcoin, and then the rest stable coins. So there is some delta exposure, and then there's yield, and it's all sort of wrapped together into one asset. So the thing that RateX does is they've abstracted away the yield. So when you're looking at this chart, you're not seeing RateX's JLP. You're seeing JLP plus yield. You're seeing JLP plus the yearly average is around 40% APR. So, this is around 40% higher than you would have what they use, which is ST JLP. It's kind of like T ETH, if you're familiar with that from EVM land. It's like the rebasing version. So instead of it just growing over time in value relative to its underlying, you just get more of it, right? JLP would be like the wrapped staked ETH version. STJLP would be the rebasing version. Anyways, the reason why they do that is because they want to abstract away the yield for this Pendle-like product. And so if you are purchasing the YTs, the yield of JLP, what you're really purchasing is that fee yield, the rights to the APY here, which last week was 63%. And if you go over to RateX and go to the trade, JLP, you can see they're selling the yield for 28%. And it really is like dollars. You can say last week it was worth $63 on RateX. They're selling it for $28. Amazing deal if you think it's going to stay at $63, because effectively every Thursday they pay you out that week's yield. So if it was 60% and you purchased it at 30% that week, you made double what you paid. And it's kind of like renting. You rent the yield. So let's just say you paid $1, but you made $2. So you doubled your weekly rent, which is kind of cool. It's pretty sweet. Now, one of the
just real quick to slow you down there for a second, just so I understand. So if I buy the yield, just make simple numbers here, at 25%, and in fact tomorrow, or is it tomorrow, Thursday, when we see the new numbers, and if it's not 25%, say 50%, that means that I've doubled my money? Does that mean I'm double my money because I spent?
No, because you'd have to be in there for like a week. It accumulates, and then there's a payout.
Got it.
And once you're in for a week, like if you were in from Thursday to Thursday, and during that week the average was twice your purchase price. So if the average actual yield that week was 50 and you bought it at 25, then yes, whatever you paid in rent, whatever you effectively paid your obligation, you would have made twice that much. So if you paid $1 to keep that position open, you would have made $2.
Right. And the reason you're paying $1 is because is the depreciation of the asset, or you mean, is it just, it's not a spent cost, it's more like because this is a market that's open for 151 days, right? So like having a dollar in this for a week, it's not going to, the YT is not going to depreciate. There's no like spent cost.
Like let's just say whatever your principal is, it costs you $1 per week to keep it open.
Sure.
By that, what
cost of capital.
Exactly. Loss of capital. So YTs go to zero over time. That's just the way they work. So you get the yield and you've paid for it. So it's like if you buy $100 worth of YTs every week on RateX, you will be paid that week's actual yield, and you will have paid whatever the purchase price you bought it at worth a week. So if, let's just say you're open for, let's say you purchased at 52% and the expiry is a year from now. So every week you'd pay 1%. And if the actual yield is 104%, so twice 52, every week you would pay up, or your YTs would devalue by 1%, but you're getting 2% of your principal. So at the end of the year, you've got 200% of your principal. You've lost 100% of your principal. So you've 2x.
Do we have any historical data on like the range of APRs for JLP? I feel like there's like a Dune somewhere around for that. Is that right?
I was pulling it up. Yeah, it's JLP APR made by Guamacoli, which I love that name. Here it is. Sorry for those who hate light mode. I'm sure there's a way to do dark mode for Dune dashboard. Oh yeah, right here. There we go. Okay, so I love this Dune dashboard. I use it all the time. Shout out to Guamacoli. I couldn't find him on Twitter. I wanted to like actually give him a shout out, so I'll do it here. But so here's the daily APR. Yesterday, the daily APR was 82%. Nuts. So the fact that you can purchase it on RateX for 26% or whatever, or 25, whatever it's at, 28%. For me, like anything under 27% is a buy, but it doesn't matter. Yeah, and it was 82%. So probably the weekly average is going to be better than that. Weekly APRs, you can see here, 46, 44, 42, 49, 59. That's why. So yesterday, me knowing this, so the way it works is on RateX, when you buy the YT, you can also buy it on margin. This is something that Pendle doesn't have, but needs to have because it was so cool. And what you're getting when you do that is not only leverage exposure to the IY, which is the price of the YT. It's kind of hard to say, like it's whatever the markets here are valuing the yield at. Right now, the markets are valuing the yield at 28% APR. You can think of this like a price, so like $28, right? But the actual weekly average price, according to this Dune, is $46 or $44. So, imagine leveraging that up to 10x. And so, me just being dumb, I put like, I don't know, $500 in there and just 10x leveraged it when it was at 25%, thinking, okay, on Thursday. So what happens on Thursday is that the yield is distributed and it pays down your obligation. So it kind of increases your margin effectively, or decreases your, I don't know, the way they use obligation is kind of weird, but my understanding is they're like, because your margin, in this case is JLP, your margin is not decreasing, but your obligation is increasing because like YT goes down over time. Anyways, they pay down your margin with that. And so I was like, oh, perfect. If my cost to keep this open is half of what I'm going to get paid on Thursday, and I'm at 10x leverage, that's like a 20x for that week, right? So if I paid $1 that week, I would get 19, I'd make a $19 profit that week. So I did that. And then apparently other people thought it was a good idea. And the IY shot up to like 33-ish%. And so because I was 10x leverage, I had 10x exposure to the YT or the IY price. And so I doubled my investment within like 4 hours. I did exit because I wanted to play with something different. So I won't even get to experience that awesome Thursday phenomena. I may like put some in there anyways.
Can you, real quick, sorry, go back more time. What does it mean to leverage your YT? I'm a big user of Pendle. This seems very different. Seems cool. Also seems kind of scary. Can you just break it down how it works?
Yeah, it doesn't let me put in one here. That's too bad. Can I? Yeah. So can I pay for something else? No. So basically, when you're at 1x leverage, it's just like Pendle. I can tell you rough numbers just by looking at this, that if I put one JLP in there, which is like $4.70, I would get 9.4 TJLP, which is effectively, you get the exposure to 9.4 JLP yield, right? You're not buying JLP, you're getting the yield of that. So, one JLP is like we'll call it $5. If it's $5 and, let's say it had 100% APR, that means it's going to generate another $5 per year. So if you have 9 of those, it'd be $45 per year is what you're going to generate from your initial. That'd be crazy. So you're buying the yield. You're not buying the underlying asset, you're buying the yield. And at 10x leverage, you're literally buying 10 times as much. But because it's like perp trading, you can think of this as a price, and there is a liquidation price. So it's at 28% now. 10x leverage roughly means that you get liquidated when it has a 10% drawdown, probably like 9% because there's like a minimum margin requirement. So let's just say you buy it at 28%, you probably get liquidated at 10% of 28 is what, 2.8. So not a big drawdown, probably around 25%, 24%. So you might not want to go to 10x leverage, but that's the basic idea.
Wow, that is crazy. A whole new world for yield trading is what it sounds like there. Imagine if you'd been able to do this back in the day with like season 1 or 2 of Athena or EtherFi or these other.
So many millionaires. I mean, if there was liquidity, that's one of the things here is that like liquidity constraints are real, which leads me into the next really fun thing. If you're ready for it.
Well, just real quick. So this is open interest. So there's like 28,000 JLP, each one's like $4. So yeah, liquidity is definitely,
it's like $100,000 open interest.
Very thin. Can we just real quick before we move on to the other exciting thing that you have, what does it look like to provide liquidity for this market? So if you're LPing this,
that's the thing I was gonna do.
Okay, sweet. Great minds think alike, I guess.
Yeah. Well, yesterday you had mentioned something that really sparked my interest, which was like you said, I think that RateX has concentrated liquidity, and they do and they don't, which is weird. So if we go back to trade, they only have concentrated liquidity for the markets that they have leverage for. So if we go over to like, LRT Sol, there's no leverage, there's no concentrated liquidity. If we go over to KY Sol, there's no leverage, so there's no concentrated liquidity. But if we go to BB Sol, as an example, there is leverage, so you can do concentrated liquidity. Now, in my opinion, the most interesting one with leverage is JLP, and it has the most volume and it has concentrated liquidity. So if we go over to liquidity, you can see, I have a small test position in here. I opened this yesterday to sort of see what I could get. You can set your lower and upper rate. Now here you're setting the lower and upper interest rate implied yield that you think JLP will trade at. And, I've been watching it. It's hovered between, let's just say 20 and 40%. More recently, really sort of strictly between, well, I'm not even going to tell you my range because then you're going to copy trade me and suck out all my APRs, and I want to keep those. So I've been in this for a day, right? Nothing crazy. And in a day on this, I have yielded $1.20, which, doesn't sound like a lot, but when your principal is $500, and this hasn't even been a full day, that annualizes to 319%. Now, 319% APY on JLP is fantastic, but you have to remember though, it's not on JLP, it's on STJLP. So if you're comparing it to the chart of JLP over on, well, we lost it, but here it is. If you're comparing it to this, you have to remember that first subtract the, 40% from it, That's STGLP, and then compare it. So really comparing to GLP, it's not 320 or whatever. It's like this minus 60, so 250. But that's still amazing. So 250%, love it. It's awesome. And yeah, I can't complain at all. So that's where I've been, and we'll see how it continues to go.
Yeah, well, great that you're not telling us your range there, because you don't want to get diluted.
Yeah,
Being very. This is fascinating. It's kind of amazing to think about what could be done with all of, like, point speculation has driven Pendle for so long. Pendle is an amazing product. Like, I mean, just to talk about this for a second at a high level, Pendle is kind of really created this as like a primitive. I know like there's been others, like for example, there was, who else did this? There was AP Wine. There was, what's the one was that R? There was one in the NFTs that did this also. Anyway, few people tried it. Pendle has popularized it. Pendle's still the king of this, like the deepest liquidity. I use Pendle all the time, especially just because there's so much liquidity for a lot of these pairs, and you can set limits. You can do really cool stuff. Spectra is innovating because they're kind of making it permissionless, which is cool because teams can just like jump on and like do different pairs.
Someone told me they were gonna do. They also had like margin or leverage. I don't know if this is true
about that, but they don't have like limit orders and a lot of stuff. So it's still pretty basic. RateX though does seem like it's actually like bringing some new and innovative stuff, which is very cool. Super interesting that you can leverage it.
Patrick.
Yeah, show Patrick this. I know he'll appreciate it.
Telling Mara two things. One, that I currently have a 320 APY position on my GLP, which I love. And it's I don't know what you call it. Delta neutral is the wrong word, but it's like single delta exposure. So I'm not exposed to anything except for GLP, which I love. So that is because RateX, that Pendle-like platform we talked about before, has concentrated liquidity. So you can effectively go here, go to GLP, and then choose what you think the range of implied yield for GLP will be. And as long as it trades within your range, you get a leveraged exposure to the trading fees on the platform. So it's been amazing. Like I said, I opened it yesterday midday, so I've been in for about half a day, and it's annualizing over 300%. Love that. And I was also telling Mara that you can literally you can margin leverage the YTs. So if you wanted, with one GLP, you wanted exposure to 100 GLPs worth of yield, you can do that. And currently, if GLP's yield is 64%, and you can buy it for 28%, could be a good buy. Now, I did also mention, just like margin trading with perps, you can get liquidated if the IY goes down, 10% if you're 10x leverage, or 30% if you're 3x leverage, et cetera, et cetera. So do be mindful. And I've only been playing with this with very small amounts for two reasons. One, because it's new and I had to understand it. And two, because there's low levels of liquidity, which is one of the reasons why I'm getting so much in a fee yield, because I'm providing liquidity. There's a lot of volume relative to that liquidity. It needs more liquidity. So, if you are going to play with it, don't play with too much size. And if you want to provide liquidity, it benefits everyone. So why not?
Real quick, Stephen, I think we covered the risks of leveraging, and just to state for everyone, leverage in any way that you're using it can be incredibly dangerous. As Stephen said, if you're at 10x leverage, a 2.5 move in the IY can liquidate you. These are super thin markets, so like high volatility in low liquidity environments, there's a recipe for disaster there. We've covered that. But just real quick, so if people are using concentrated liquidity and they're setting a range of the Y that they want to have on a certain pair, what happens if I go out of range? If it goes to the bottom side of my range and I go out of range, or the top side of the range and I go out of range, what happens there when you're providing concentrated liquidity for a yield trading derivative? What a mouthful.
Yeah. Your entire portfolio and your EVM wallets all get drained immediately. It's not true.
Makes sense. You have to sell all your ETH. Is that what happens if you got a range?
All of your ETH is gone. Basically what happens is you will end up exposed to one of the two assets, either the PT, which is the principal token, or the SY, depending on which direction in the range you go. I'd have to do a little bit of critical thinking to figure out which one you would be exposed to. But the PT is the interest-bearing one. So that's the one that increases in value over time. So if you go out of range to the downside,
then you have PTs.
Yeah, you should be in the PT, right?
And then to the upside, it's YTs.
Yeah, right. The SY or the principal asset. I think, right? I'll ask them later. We'll get a more robust answer for you next week. But that's how concentrated liquidity works. If you go out of range, you end up with one of the assets. But because it's like the PT against the SY, which means like the fixed rate returning JLP thing versus JLP, those are the two things you'll end up with all of.
And even for folks that don't feel like messing around with concentrated liquidity, even just doing the generic version of LPing on this is not bad. The APRs look pretty decent. Also, it's even just like relatively tight anyway. Like the whole range is from 5% to 200%. So, you're not providing from 0 to infinity like you would with a normal, Uniswap V2 style. You're already relatively concentrated. And so if you feel like you have a good sense of JLP, feel like you have a good sense of like concentrated liquidity, this is a very cool product. I'm also excited just to be talking about this because it'll hopefully people will go out and play with this, not with like, a lot of funds, but just with enough to like understand it and stuff. But that should hopefully mean there's more liquidity for JLP on RateX. And I honestly think that, on the Solana side, both me and Steven have been, increasingly wetting our feet in Solana DeFi. RateX seems like it's got some of like the more interesting innovations of what's going on there and some like really cool tools or toys, maybe I should say, for yield monkeys like Steven and I to play with. So it's great.
Yes, exactly true. Oh, and Patrick, I finally opened up a JLP position. So not only have I been playing with RateX, but I actually took a chunk of my portfolio and chucked it into Camino.
Portfolio.
Well, yeah, that's the technical term, right?
Yeah. Some other risks of leverage people should know about is you risk making too much money. So you might make too much money and retire and not know what to do with yourself.
Yeah, and then the quality of living can actually go down when
exactly, because you don't have nothing to live for anymore. Jokes, people, right? Jokes.
Yeah.
Be careful. Only use leverage if you know what you're doing. I always say I'm always say like, the rule of thumb is avoid leverage, and if this message is not for you, you already know it because you know what you're doing. But if if you have to ask, then it's not for you.
That's spot on. It's funny. Everyone has a different approach to this. I don't want to speak too much for you, Steven, but you do dabble with leverage. I personally never use leverage. I don't use leverage. I don't trade on perps unless there's like certain key things I'm doing. So I will trade perps if I'm like doing a down to neutral position, but I don't like use it to go long short on something. I do loop on money markets when it's a delta one position. So if I'm leveraging up like a SOL or an ETH LST against like the underlying asset, in that sense, I am using leverage. But when there is, when there's price exposure involved, so when there's mixed delta, I'm quite skittish when it comes to leverage. Now, that doesn't mean people haven't had massive successes. One of our good friends, Steven, has had a thesis on being like, what is it, like 2.5x leveraged majors like BTC and ETH and SOL and stuff, and has done very well. But they've also had scary times where they've come close to liquidation. They've been liquidated. It can be a very double-edged sword. So I'm very much on Patrick's side of that. If you if you know what you're doing, it can be an amazing tool, but it is easy to get underwater.
Yeah, and if you have to ask, then that probably answers the question. People have been trading for years and know if they can do it. I'll say I do use leverage sometimes. I use leverage maybe a few times a year if there's some event that happens or upcoming catalyst that I have really high conviction on. And I'm not talking crazy leverage, right? I'm talking like 2x.
Only a 50x.
Yeah, only a 50x, not a full 100. Or I've done it before when this was more so in the bear market, but when I was fully deployed, we got another retracement. So I added like 20%, like not even an X, like borrow 20% of stables and add it. But that's, wow. I would say it's like a few times a year is when I'm doing that.
For those that can't see what's going on the screen, Steven, our friendly neighborhood troll here, just because I've been ragging on leverage, just opened a 100 long long on SOL with a whopping sum of $11. So thank you, Steven, for proving the point. Let's see if you get liquidated. It'll be very funny.
Patrick said you can only make money on these.
Yeah, well, the risk is you make too much money, right? I mean, just think it could go to 300, and what would happen then?
That's right, yeah. And if at 100x leverage, my exposure, no, let's not even get into that. So I'm going to leave this open, and I guarantee you I'll be liquidated by the end of this call, just to show you why leverage is painful. So in the time,
will you just go back to... Oh, do we get
3%? Not liquidated yet. Sorry, go.
Oh no. Go back to Camino and the multiply. There are, I think, some new interesting options here for those kind of delta one pairs that I was talking about. So like obviously we've talked about this in the past. You know, Camino's a great place to get kind of like yield on Sol assets. So like what Steven's kind of highlighting there, the Jupe Sol at 15%, Jito Sol at it's almost 16%. There also are other ones as well. I think that they've started to add, maybe it's under the multiply section, or maybe it's a little further down, the LRTs. Like I think that the Renzo one is maybe there. Maybe you have to go to the actual money market section and they haven't actually added. Yeah, there we go. Easy Sol. I see it.
Oh yeah, look at that.
And then KY Sol, is
No
that?
points on this, right? There's still no points. It's all res rewards.
But it's also earning the underlying restaking yields as well. Here, I think I actually saw some details on this. Let me just see if I can find it real quick.
Yeah, no, I think Renzo sent us a message yesterday.
Right. Yeah.
But so this is actually really good because actually, do they have? Oh, can you not borrow against it? It says liquidation LTV 0%.
I thought you could leverage this up. Anyway, maybe we don't know enough about it to talk about it.
Well, no, but if you can supply, I don't know.
Interesting. Anyway,
in the meantime, Patrick, give us an amazing thing that you learned this week while I go give my daughter a snack.
That was an enthusiastic call for snacks. Something I learned this week. Well, here's something interesting. So for a while, I've been harping on this idea I had for a metric that would be, I was calling chain GDP originally. Now many people are calling it app fees or app revenue. I wrote this article over the summer, this past summer, that got a pretty good amount of traction. And so I take a little bit of credit for popularizing this. Basically, it's the sum of either the fees or the revenue of every application on a chain as a way to measure how much actual activity is happening, because addresses and transactions, not very useful, because you can have a transaction that's worth $1 million and a transaction that's worth 0.5%, and there's no differentiation, and it's really prone to bots and airdrop farmers. TVL is useful, but can be very reflexive, and also, in some ways is very much dependent on the price of the underlying asset. Volume is better, but the problem with volume is it only is one type of activity. It also can be faked by wash trading. Love the hat, Steven. And so then I had this idea for what I was calling chain GDP, which is like the GDP of a chain or app revenue. Anyways, the interesting thing this week is a lot of platforms have now added it, including the one where I work, DeFi Llama. And so I was like, okay, Solana's app revenue is insane right now. It's like, even after retracing a week and a half from the Trump thing, I think it's still like 3 to 4x ETH on a daily basis. I will say though, and you know me, big Solana guy, right? I looked historically at all the peaks in app revenue over the past year, and the local tops in app revenue were within 1 to 2 days of local tops in price on Solana, like basically 3 for 3 times. And then there was that doesn't include the most recent one. That was a couple days ago. But that one also was the same day that Sol hit an all-time high. And so my thought was, so if you go to chains, click on, this is volume. But if you were to go to the chain section, I'll show people what I'm talking about. DeFi, chains, Solana, and then remove TVL, add in app revenue at the top, and add in Sol price. Sorry, now go to the chart. I scroll up. There you go. So add in app revenue. I know you can't see where I'm pointing. Go to app revenue. Yeah, right there. And then Sol price.
I'm sorry. Okay, Sol. No,
not volume.
Price.
There you go. And you can get rid of TVL. So here's what I was talking about. Just show like this year. So this is something which interesting. I kind of was just looking at to try to analyze it and figure it out myself. You see that peak in March coincided within 1 or 2 days of a peak in price. You had another one, which was not an all-time high, but was a local top in price in July, which coincided with a peak in app revenue. You had one in November which was an all-time high and local top in price. I think it was 2 days after peak in app revenue. And then you had the one coinciding with the Trump launch when both of them hit a high in the same day. So my thought was, okay, this thing measures economic activity. Maybe it has some value as predictive, but it might also have equal or more value as a top signal, where if this goes crazy, it's a sign that things have peaked.
So you're saying it's a leading indicator. Solana is topped. It is time to short Solana.
Yes.
Coming from the mouth.
100%. Yeah, 100%. And not exactly, but I guess if this has any truth, right? It's a relatively small sample size, but three in the past year, I was like, okay, that's like pretty good hit rate, right? Pretty good hit rate. Might be a sign that it's going to take some time to cool off before pushing to all-time high again.
And just to be clear, what does this mean for Steven's 100x long on Solana right now? Does that mean he is already liquidated, or? Oh,
14%. Let's go. You can never lose.
Yeah, you're like multiple years stock market returns in just a couple minutes.
That's right. Yeah, man, I'm up 36. Now I'm down.
Oh, yeah.
Hey, leverage is dangerous.
Can we see what you're paying on funding rate also? Yeah, it's not that actually that high. Well, I guess it's that times 100x, so it is very high. Never mind.
Yeah, don't never look at funding. Close before you pay it. That's what all the smart traders do.
Patrick, that indicator that you just pulled out there is fascinating.
Yeah,
I have never.
It seems pretty decent. Go ahead.
This is silly, but I've never played with the graphs on DeFi Loan before. I'm always messing with the tables and changing those, adding stuff to them. But for some reason, I never thought to click on the big blue bubbles that are at the top there and change the way the graph looks. So,
it's great. Yeah, that's good to know because we're doing office hours this week. So I'll make sure I talk about that.
I feel like we need to have you give us at some point, it doesn't have to be today, but a deep dive into DeFi Llama, all the different cool metrics and visualizations that we can have for data. I love DeFi Llama. I think I literally use it every single day. I think that's probably true, but there is so much and it is a free, amazing tool. It would be great to have a tutorial on how best to use it, how people can think about it. Obviously there's a million and one ways that could be done, but even just top 5 highlights of your favorite stuff would be very cool.
Well, this graph thing is interesting because I didn't realize, I guess it makes sense. It didn't occur to me that people might not realize you can do that.
The interesting thing though, so what you're talking about with fees, there is this kind of rent seeking nature to what you're saying. I'm not saying it is not an important statistic. I think it is. There's this what the apps are actually generating is very interesting. I wonder what that tells us. What does that tell us? It gets back to this same argument me and you seem to have almost every week, which is okay. Well, we'll just rehash it slightly right now. And that is I still think that there is this kind of extractive nature of Solana that also shows up in this data that you're showing here, which is meme coin traders, for example, these hundreds of thousands of people that came and bought Melania and bought Trump a couple weeks ago, whenever that was, they're down bad. And I think a lot of meme coin traders are down bad. And so there is this kind of extractive nature that meme coins have on Solana. Doesn't mean it's necessarily negative, but I do think it's worth pointing out. And then also with all these fees that are being generated, sometimes that's also because Solana apps are targeting a demographic that is yet less used to interacting on chain. So we see this, with different applications, for example, MetaMask and Phantom, for example, that charge, I think it's 80 bips to do a swap. That's insane, right? That's so expensive. Even Jupiter, who is one of my favorite protocols to use on Solana because they're just great at what they do. Their new swap aggregator, they just came with a new front end. If you want to swap spot now and you're using this new ultra feature, which I can't remember what they called it before, but it's basically they help you with the routing, they help you with the slippage, they take a lot of the complications out of it. They now charge 5 bips on it, which, maybe it's worth it. Maybe 5 bips is worth it because of the added benefit that they give you by using Ultra. But, if you do the manual version of this, so you click that toggle kind of in the middle on the left-hand side up there, then it is going back to free, but you have to kind of know a bit more of what you're doing there.
Interesting.
So
when we do manual, what do you have to select?
You're selecting the slippage. So for example, a lot of Solana so this is one thing I will say. I interact a ton on chain. On ETH, it has many problems. I'm not trying to sugarcoat this, but it is easier to get very good execution on ETH. On Solana, I definitely find that slippage tends to be a lot higher. There's a lot more volatility in assets. There's a lot lower liquidity is what it tends to be. And so it's harder to get good execution. So you end up paying a lot more in slippage, on your transactions if you're not paying attention, which I think a lot of people do, right? So I think that kind of leads to some of the stuff that Patrick is saying, which is there are higher fees because people like Jupiter or Phantom can take kind of this rent out of it because it's a harder kind of environment to interact with. And then also there's a lot more MEV around because there's a lot more volume, but there's also a lot kind of less sophisticated actors trading on chain. And so Jupiter protects you from that, but they also charge you for it. And so that's why people like Jupiter, at least to some degree, are absorbing a lot more fees. The other reason, of course, and probably something you're going to say, Patrick, which is 100% super fair, is there's also just an amazing amount of volume. If you look at, like Sol USDC, or even last week we were talking about ETH USDC on Solana, the volumes are incredibly high, and that is super impressive. But there is this kind of like underlying negative externality of taking a lot of money from the participants in the markets, which, I don't know, it slightly churns my stomach.
Yeah, I think one way to think about it, though, is okay, so some of these applications, they're charging higher fees. It's also partially because they're providing, like you said, they're making things easier, and there's a lot of new people on there, same way that Coinbase is able to charge higher fees. But my counter would be, so first, people talked about transactions on Solana, and I'm talking like years ago, and for good reason. A lot of people said, hey, that's not really good measurement because it doesn't have anything to do with the actual money, right? You can have 10 million transactions and they're all meaningless. So then a lot of people switched to volume, and then Solana was doing a majority of DEX volume, and then people started saying, well, a lot of that's meme coins, or it's pairs that don't exist for very long, so we don't know if it's wash trading.
Solana Maxi Deep.
That is hilarious. But then then it's like, okay, so we're trying to get down to like something that's tougher to fake, which is app revenue, because that's what people are actually paying to interact on the chain, which is, I would say is, I don't know if there's a better measure of actual economic activity than what people are willing to pay to go on the chain. And so then it's like, yeah, you can make the argument that, they're able to extract it for this reason or that, but why, I guess the thing is that it counters the argument that everything on Solana is just wash trading, because people are actually paying to do it. And I would, ask the question of like, what would be a better measurement of economic activity?
Well, I think that the answer is simple. I mean, it should. I'll just cherry pick all the things that ETH is good at. So it's total number of stable coins on chain, the number of solo stakers that are securing the network, total TVL. No, I'm kidding. There is no perfect way of doing this. Like, yeah, well, I agree with you.
So I think the thing is like those ETH is far ahead in metrics like TVL, total number of stable coins. Hands down, number of solo stakers as well. What we're trying to get to here is, okay, so you measure you have the static measurements. What about measuring activity in some way? And transactions has its issues, volume has its issues. Measuring the revenue of applications on chain is another interesting one. It also has big implications for where people choose to build, because you saw this with Virtuals announcing that they are expanding. They're not moving, but they're expanding to Solana. Is if you're a founder, you have an application, you might look at where are applications making money. If you view blockchains as platforms, right? Like step back, for most people in the world, blockchains, they're not a community. They're not like a philosophy. They're not an ethos. It's a platform you're building a piece of technology on. And if you're a founder, you want your startup to make money, you're going to look at which platforms people are making money on. Same way someone might choose to launch in the App Store versus, a store for some phone that only a few million people have.
Yeah, I think it's fair. I think I do like this metric, and I'm actually, it's great to hear that you're one of the originators of this idea of like looking at this as like a way of measuring blockchains. I think none of these statistics provide a full picture, but I think the more we talk about them, the more we look at them, and the more we use DeFi Llama, which is just a great way of actually pulling out this data, we can kind of continue to get better at this, right? And who knows what happens, right? Who knows if over time, like people are just willing to pay a bit more. People use credit cards, right? And there's like this hidden underlying fee of several percent, what is like 2%, 3%. And people kind of just like live their lives and like enjoy the comfort of having a credit card and being willing to kind of like just socialize that extra cost, that hidden cost. And so maybe, it's similar. Maybe like the better user experience that Jupiter provides with routing is worth the 5 bips. Arguably I think that is. When we get to like 80 bips on Phantom, like maybe that's not true. But anyway, go ahead, Stephen. Me and Patrick can wax lithely on this all day, probably.
Gearbox has made the same argument that people are willing to pay a premium for a better user experience. And I do think that there is a premium on user experience, especially for people who are new into DeFi. Like if you want to do auto leveraging, which can be a huge pain, Contango offers this with a 5 BIP on your notional, which, at 5x leverage, it's not really that bad. You're paying 25 bips to enter, 25 bips to exit. But at 20x leverage, that can be super painful. I mean, I guess is it 5 bips or is it 2.5 bips? It's something relatively small, but people are willing to do that because they're avoiding gas, they're saving time, they're getting an easier user experience, and so people are willing to pay for abstraction. I mean, even just this week, didn't we see Coinbase effectively dabble with the idea of allowing people to trade any asset from the Coinbase front end as like an integration natively with the underlying DEXs? Now, I'm sure they are going to take a little bit off the top there, and they can, because what people are getting is a better user experience. It's easier. It takes less mental lift and less like intellectual scaffolding. And so the premium is built in. As we've mentioned 100 times here, Solana has been the on-ramping chain of this cycle. You have a lot of new users, and they're going to be willing and ready to pay higher fees. Now, maybe this will eventually draw them into ETH, but on ETH you're paying incredible amounts of gas. So unless you're a whale, you're still probably paying more. So I don't know. It's an interesting conversation to have.
Yeah, well, I think one thing is, if you believe in a free market, which I'm guessing most people who are into crypto do, then people are allowed to build trading tools where they charge a fee and users are allowed to use them. And I guess Jupiter might be different, but most of these top revenue earning things like Telegram bots, desktop trading apps, those kinds of things, I actually doubt that it's like these new users who are coming on to buy Trump coin for the first time. Moonshot definitely is, but a lot of these other ones like BullX, Photon, I would guess that a lot of those are people who are more sophisticated that want some feature that's like beyond what you can get from regular swap.
Real quick, Steven, can you just go and look at these numbers for base? I'm just curious. Like, so we're seeing like high level numbers, $10 million for Meteor, $10 million for Radium, Jito 11. I'm curious what the volume number, let's see.
In terms of fees or volume?
Fees. Yeah. I mean, like that's amazingly different, right? Like,
yeah, remarkably lower.
Yeah.
Across the board.
It's a strong point. Even like just, these are not like one-to-one comparisons. I guess Uniswap in some ways is. I'm surprised Airdrop is only making $614,000 a day when you have Meteor and Radium making $10 million a day. Like orders of magnitude difference there.
Yeah, but one difference I will say is Airdrop has one of the highest holder revenues of any application because they are passing all of those fees on to token holders. So
this,
right. Yes. So like one difference is that Airdrop is actually capturing a lot more of those fees as a protocol.
Got it. And the ones that we're seeing on Meteora on the last page we were just looking at, is that actually going to the protocol, or is that measuring fees that are going to LPs?
Fees would include LPs and protocol. Revenue would be just the protocol. Now Meteora, I'm not sure if it actually has revenue. You can either customize the columns or you can click on the revenue button up top to.
They do take revenue. I think they take something like, is it like 20 bips of like the total fees or something like that. So anyway, I do feel like we're slightly talking, apples and oranges when it's like, what's the total number of fees to LPs? Like there are differences here between like, fees, revenue, all this stuff. It gets pretty nuanced, but yeah, it's super interesting. And I guess like all of the fees that we were just seeing that are going to Jito are actually going back to stakers and people who are participating in the Jito system. So very interesting.
Now, I will say I was liquidated.
So clearly Sol's not a good asset.
You know what? This is a good lesson because I think it's right back at the price it was when you opened it, isn't it?
Yeah. I mean, if I look at my history, price $234, and we are actually up. We're up $2, and I am liquidated.
You were liquidated at 234. You put him at 234.
I opened it
down. Steven got wrecked.
Yeah, that's right. Never use leverage. I take back everything I said.
You know what? This might be a good concept for the podcast. Like the entire podcast, you have a little sidebar going. You open up a trade at the start of it, 100x leverage trade, and you have just it running at the side, like those games where people have like a video of themselves playing Minecraft on the side.
Oh yeah, just have that.
Keeps people interested. Yeah, with the short attention spans.
That's brilliant, actually. Just half a soul would be a huge position, and you would always get liquidated every time. So don't do that. But like a tenth of a soul or something.
Yeah, like a $5, $10 position. It could be fun, right? Could be cool.
As a proud GLP holder, Steven, I do thank you for your service. We will absorb your losses.
That's right. Yeah, myself. Go back to me. Look at me. This is full circle.
Well, it's an Ouroboros.
Yeah, I am my own exit liquidity, and I benefit from it. Yeah, so that's been cool. And look, JLP is up because of me. That That 0.002. That's me. You're welcome, holders. No, I know we don't have a lot of time left, but I do want to like at least point out some kind of big things that are on the horizon that people have been talking about that have been sort of in the zeitgeist. One of them has been rings. I did a post on rings. I think it's going to be a really big incentives package. I mean, no matter how I'm like cutting it, not rings, both rings too, but Sonic, the blockchain formerly known as Phantom, which we know Patrick is super bullish on because all of his favorite main characters coming back. They are doing this 200 million Sonic campaign. And, you could think, okay, well, that's cool. That's great. But like that could be over the course of 4 years, 5 years, like Arbitrum does LTIP and STIP and yada, yada, yada. No, this is going to be a 1-year campaign. And, the rumor mill has it that the first airdrop of this is going to be between 40 and 60% of that total. And so we've done a little bit of math somewhere. Oh, I forget where I did it though. So I can't show it to you. But I had done some math that suggests that it could be pretty remarkable. Like I'm talking 30% to 40% additional on the total. Actually, I think I can find it real quick. Yeah, is this it? Is this the one I'm looking for? TVL, average ROI, APR? Yeah, this is it. So we're going to look at a chart. We're going to look at some spreadsheets because I know you guys like spreadsheets.
Funny story about the main character, by the way, just I'll throw in. I was doing a space last night with someone who was, he's Anon, but I know his identity, and he's like an executive at a pretty good sized hedge fund. And he forgot that it was just like not a call. And he like said, like, was talking about this person, this main character, and saying he's like the biggest scam artist in crypto is back. And I was like, hey man, like he's gonna send people after you. Yeah, we're live right now.
Were you actually live or was it a pre-record?
We were actually live. It was in a Twitter space because he forgot that it was not just a conversation.
Yeah. Hey, well, you know what? That speaks to your hosting capacities, I guess, in one sense. So congratulations to you. Hopefully people don't come after him. What was that guy that was like, I'm going to put a curse on Martin Shkreli? Hopefully they don't like hire some shaman to curse him now. Okay, so here's some numbers, right? The current TVL of the entire chain on Sonic is at like 250 million, which is great for them. They doubled their TVL in a week since we talked about him last week. Patrick disappeared. I don't know where he went. Maybe he's got a curse on him. Hopefully he'll come back. But 250 million. And so I'm estimating that this first season will get up to 400 million. The incentives package we know is going to be 200 million S. S is the Sonic asset. Current S price was 60 cents. I don't know what it's at now. Mara, you can correct me if it's like somewhere else. So that means the value of this package is around $120 million. If they give out 50% of that in the first quarter, where I think the first airdrop is going to be, that's, $60 million distribution, which at these different chain TVLs gives you an average additional APR on your capital between 60% at, double the current TVL on chain, all the way up to, all the way down to 24%, which is like, let's just say we had $1 billion of on-chain TVL incentivized in that first quarter. So this is why I am, pretty bullish on this first season of Sonic emissions or like campaign. And there's a lot of ways to play this. Okay, first of all, what do you think with my funny number math? And then 2, do you have any like plays that you like for this thing?
Yeah. First of all, unfortunately, Sonic price is down to 47 cents now. So that's a little bit less. I do think it is an asset that potentially could do quite well. There's like a lot moving and shaking over on that side. So definitely some yield opportunities to take a look at. The 2 things that I'm doing is, one, on Silo, there's like a lot of different leverage plays. I'm not leveraging anything up on that. I do have like a small bag of S tokens, and I'm just lending that out on Silo. I think yesterday it was like, I don't even know, was it like, you're looking at Arbitrum now, but if you go up to V2, first of all, yep, and then go to Sonic, I'm just doing some vanilla lending of the Sonic token, which is paying 13%, plus it's getting points. So that's cool. That's a pretty vanilla play. The other thing which I'm doing is on Spectra. We don't have Pendle over there yet, unfortunately, but we do have, Spectra, so we can kind of go and play with the YTs, which of course everyone knows is one of my favorite things to do. Unfortunately, there is no limit orders. Otherwise, I would, of course, be setting stink bids on limits. That's like one thing which I do quite a bit on Pendle. But I do think some of this other stuff's kind of interesting, right? I mean, you can get fixed rate almost 29% on stablecoins with SCUSD, which is like the Rings protocol asset. So that's very interesting. I do also think that like, this could be a potential other one where YTs could be very interesting if some of those numbers that you're throwing out there, Stephen, end up being correct in terms of like the total dollar amount going out and when the seasons are. Buying YTs on some of these things means you're getting a leveraged exposure to those numbers you just said there, could be amazingly profitable. So I've started to dabble. I think Sonic is interesting. There's definitely some interesting stuff going on. Is there anything that you're doing on this side, Stephen? Have you been playing around in Sonic?
So I looked at this last night, and there were 3 strategies that sort of like stuck out to me as compelling for like different risk profiles. So if you are, a risk maximalist, then the YT is the way to go. Like you've done the math, you think, okay, we're probably going to end up ballpark 30-ish%. Maybe we'll triple total TVL by the first airdrop. Maybe they'll quadruple, but that's still around probably 26% for just the Sonic portion. Maybe, by the way, if we triple our TVL, we'll see some like fundamental headwinds for the price. Price will go up because the vanity metrics also increase. If that happens, I'm happy for seeing 30%. Now, I know you get great multipliers on buying these, so I go over to yield leverage. I look at something like, S, right? Because when you're buying the yield, you don't really care about what the underlying is. You just want to see which one is the most mispriced. And so you're saying S with a crazy multiplier, 14x, 15%, that sounds great. And you're getting 8x Sonic points. Now, I will say you are getting 12x Sonic points for SCUSD. So maybe if you're really, that's what, 50% more. So that's, you can say like plus 7%. So really what you're seeing here is that the rings and the Veda points are giving you a premium of another 4%. And if you think that's true, this is the way to go. If you're not really bullish on rings or Veda, you might want to go with this one. No, I actually think rings will be a decent airdrop. And I also think that getting them early is the play. The reason why I think that is because rings is not going to be diluted. Now, that's kind of a weird thing to say for an airdrop, but what I mean by that is they give out the airdrop weekly. So every week, 4% of the airdrop gets allocated to the users. So you're only really competing with that week's TVL, not the total TVL by the airdrop date. So that's pretty cool, and I like the way they do that. I think a lot of other protocols and airdrop campaigns should consider doing the same thing. So, early ring points are more valuable than late ring points is one way of thinking about it. So this could be good. And if you want to do that, you can get good leverage on it and exposure. That's for the risk on. I think YTs are the way to go there. If you're risk off, and you still want point exposure, the liquidity pools are clearly the way to go because you're getting, 30% APY for SCUSD liquidity. And you're also getting 12x Sonic points on your principal. You're getting 2x ring points. You're getting 3x Veda points. Now, you might think, well, that's the same as the YTs. Well, no, with the YTs, you're going to get these 14x leveraged and your principal is going to go to 0 by the end. So we just talked about how YTs work. With RateX, same thing. Your principal goes to 0 by the end. You only get like the yield. You don't get to keep any of your YT value, but you're getting just a crazy amount of points that you think will be worth more than what you paid for them. So here you get to keep your principal, right? You get to keep your cake and eat it too, which is great. You get to keep all your principal, you get a yield on it, you're getting 30% APY, and you're getting 12x Sonic points, that principal, 2x ring points, 3x Veda points. I think this is a good risk-adjusted play. If you don't mind being exposed to like boring vaults. Boring vaults are multi-chain vaults that are effectively backing the SC assets. If you like those, this is nice. Now, if you're really risk off, one thing I like is silo lending USDC. So let's just say you're uncomfortable with any exotic stablecoins. You just want USDC exposure. Here, 10x Sonic points, no leverage, just lending, and you're getting incentives in S. So maybe you want some S exposure. This is like for the very mellow, relaxed, I would say, point farmer who just wants to get some yield on their USDC.
Yeah, there's a lot of opportunity out there. It's just super interesting. The other big... Oh, go ahead. Go ahead then.
The last one is I was thinking about this last night, a delta neutral play. So you can leverage STSS. So you're collateralizing STS, you're borrowing S, you're converting that to more STS. This is just what we call a liquid stake loop. You're probably familiar with it if you've been in DeFi for a long time. If you're not, ask about it. We'll tell you about it. But you leverage that. So you get leverage exposure to whatever points you're getting. I think you're getting 8x here. So let's just say you end up at 8x leverage at 64 times points on your principal. That's phenomenal. And then on top of you're probably paying 30% on your principal to keep this open. So do know it's going to be a net negative position, but you can short that if you wanted to on Hyperliquid and get paid 10% on your shorts. So you're probably going to be about break even on your principal value, but you're just generating 64 points per day on your position. So here's S. Currently it's paying 10%. So at 3x leverage, you'd be at 30% on your margin there. So that's one other play you could consider. But that's what I've been looking at. There's also Solve, but not a ton of liquidity over there. Unfortunately, there's not much to borrow.
Yeah, as I was saying, great plays. I'm certainly going to spend more time looking at this.
100K to borrow. There is kind of some liquidity over there. So you could also collateralize Solve, BTC, BBN. You're getting 2x Sonic points, 3x Solve points, 1x Babylon points on your collateral, and you have Bitcoin exposure. And then you could borrow Solve BTC against that at a very, very low borrow APR of 1%. And you could loop that, let's just say 3x, 4x, and so you get 3 to 4x exposure on all of these points while being long on Bitcoin. So that's another pretty cool option there.
And you're also getting Babylon, and you're getting Solve, and you're also getting the Sonic points on top. So that's great. Well, maybe just like the last thought to end on, which is probably like the 300-pound stoned bear in the room, is that BOYCO started. I've been saying BOYCO's going to launch soon since the, end of last year kind of thing. So I think we are actually finally in Q5. So very exciting stuff. Congratulations for everyone who celebrates. BOYCO's live. It went live last night. The website, there's so much demand for it. The website went immediately down and has been completely inaccessible for people that want to use it. So we'll probably talk about this a bit more later on when we can actually show the website. We can kind of get into the nuance of it. But at a high level, there is a lot of kind of interesting stuff going on. One thing we found out, two kind of like headlines, and I'm going to let you get into the numbers here. Number one, they increased the FTV. People had been speculating I think Smokey said it was going to be at least 1%. And so some people were saying, okay, it's going to be 1, maybe 1.5. It's turned out it's 2% of the Barachain FTV total supply that's going to be given out. So an increase on that side, which is very interesting. And then on the other side, we have now kind of this like multiplier system going on. If you want to just go back to the other tab real quick, we can see here there's a few different types of assets and a few different things that are being multiplied for. So there's like major assets. If you just, let's see, scroll up for a second here. Do they tell us? There it is. Oh, a little bit lower down. Yep. So we have major assets. So Honey, which is like the Barachain stablecoin, USDC, wrapped Bitcoin, wrapped ETH, and USDT. Those are kind of like the major assets. Then we have third-party assets, which are like everything else basically. And then we have hybrid assets, which are basically liquidity pools of the different assets, as long as one of the assets is a major here. So it has to be Honey, USDC, wrapped Bitcoin, wrapped ETH, or USDT. So if you go down now, it sets up this interesting dynamic where we now have multipliers. I think a lot of these pre-deposit campaigns are going to fall into this like single-sided deposit. So it's just a 1x multiplier on your deposit. So like things like the concrete vaults with Athena, the Lombard vault, the EtherFi vaults, the Sol vaults. I think my understanding right now is that all of that is going to fall into 1x multiplier. Now, it does get a lot more complicated, right? So like, for example, if you are really trying to optimize for Barachain exposure, LPing stuff is going to be very interesting because you're actually getting a higher multiplier, almost 1.4%. So stuff like Reservoir, who's going to be having like a BOYCO deposit program that is LPing, you'll be able to hold stablecoins, you'll be able to earn yield while you're doing it, and you'll get a higher multiplier. So that's super, super interesting for sure. Then you have hybrids, so stuff like, I don't know exactly what those are going to be, but different like third-party assets LP'd with something else. So maybe like paired with ETH, 2.69x leverage, very interesting. And then the one I want to highlight here is bucket 2, volatile assets who are in LPs. That's getting 4.2x leverage, which is very significant if you're really trying to like optimize for Barachain. So we can't show it now. There are some pretty interesting ones. So for example, like ETH BTC LPs. Now I know ETH BTC ratio is definitely a bit of a meme. It's pretty rough for people who have been LPing that for some time now. However, if you really are trying to optimize for Barachain exposure, I do think a ETH BTC LP on Kodiak or something like that might be a very interesting position to have. So anyway, I'll take a break there, Stephen. You tell us what we're looking at maybe. Besides, don't show me that. The ETH BTC ratio is too painful to look at. We're literally at like all-time lows right now, which is very brutal. But what does the spreadsheet tell us? What are we seeing in terms of like what APRs might be on the books for us?
Now, one thing to note is that because there are so many different multipliers out there, I don't show what a person is going to get. I show what the average individual on chain is going to get. So this is like all of the people participating in BOYCO, they will have different multipliers. So there's going to be an average weighted multiplier. Whatever the average individual on chain is getting, that's sort of the numbers we can speculate on. Some people will be getting less because they'll just be doing like single-sided bucket boring. Some people will be getting more because they'll be, LPing ETH BTC, which are two of these major assets that are volatile towards one another, and they'll be getting that larger multiplier. So the average individual can look at these numbers and say, well, this is what the average person is going to get. So, okay, here are the FTVs. So speculating on whatever the FTV you think is going to be for bear chain, even Sana, who is a bit of a bear, is saying that 5 billion is probably like the minimum expectable FTV for bear chain. And then it sort of goes up from there. I don't think anyone's guessing 16 billion. That would be one of those like hyper liquid situations where it just blows away everyone's expectations and it becomes the future of France for like the next few months. But between there, I think 10 billion has been passed around a bit. I've seen quite a few people mention this as a possibility. So here's BOYCO TVL. Currently, we're at 2 billion. I think we add another billion. Totally reasonable. We might even add more. We might even get to 4 billion. But there's 77 days left of BOYCO, and the BOYCO FTV is going to be 2%. So between now and then, you have 2% of this fee that's going to be allocated to BOYCO users. That means it's going to be between, $100 million and $320 million that will go to BOYCO. As a result, you can annualize that, because it's going over 77 days. So what you would do is take 365 divided by 77, multiply that by the return relative to the TVL being used. I mean, it's just, trust my math here. And so the average APRs added to users' positions on chain for BOYCO will be between 15 and 50% depending on what the FTV is. So here, unlike other places, as the FTV grows, so does the APR. Now, of course, as the TVL grows for BOYCO, these go down. If we think the 4 million is going to be closer to the average, then all these go down a bit. At 3 million, they're a little bit higher. But at 10 billion FTV, we're looking at 31% average additional APR for people's funds on chain. So if you're doing like that reservoir play, which I will hope that's live soon, that'll be a lot of fun, where you're LPing, Honey, SRUSD or RUSD, you're getting, a bunch of their points, you're going to get BOYCO points. Also, the fee APR might even be pretty high. It'll be a lot of fun, and hopefully the chain can start to handle some of this intense activity soon, because farming over there should be meaningful. And if you're leveraging, that can get really fun. So like if you're on a place like Dolomite, and even if you're getting a really low multiplier, you're only getting plus 10% on your collateral. If you're 5x leverage and you're getting 10% plus on your collateral, that's 50 additional percent on whatever your strategy is. So just things to consider.
Yeah, it's very interesting. We'll spend some more time on this on future shows, I think, talking about this. I'm a bit more of a bull. So like I've been saying, I think the bear chain FTV will be somewhere between 6 and 12. I think that's like a realistic estimate. I do think that the TVL is going to go closer to like 4 billion. So I think we do need to look at that as well. I think it will be a bit higher than we're kind of expecting right now. I was actually talking to a fund this morning who I was surprised how bullish they were on Barachain. They were making comparisons to Move. They were making comparisons to Sui and Aptos and all these other ones, these kind of new alt L ones, even Hyperliquid. I think there's a good chance that Barachain kind of becomes one of the centers of activity and attention over the coming months. And they were making a bold prediction of 20 billion. Who knows? That might be pie in the sky. Who knows what it ends up being? But if that does happen, 63% on vanilla 1x leverage on this stuff is insane. There's so many opportunities to be able to farm this on Pendle, on BOYCO directly, doing LPs. So I'm excited to dive in. I'm not trying to get too bullish. I think maybe in that 6 to 12 billion range is probably more realistic. But if we do kind of, get the attention and the price action that some people at least are expecting on Barachain, this could be phenomenal. Also, don't forget, everything they do just gets swamped. They literally launched their website last night, and there was so much demand that it went down, So like there really is quite a bit of excitement about this. So it'd be interesting to see how things progress over the next couple months.
And I hope they at least hit 21, so that BOYCO could be $420 million airdrop. That would be poetic. But yeah, so I know we've yapped quite a bit By the way, yapping voting is live. That's a whole other thing. We're not going to talk about that. But like, you know, if you have any of those whatsoever, any smart followers, consider doing that. There might be some airdrops, maybe. I have diversified my votes just in case like there's incentives for those later. We'll see what happens. No one really knows. And for everyone else, thank you for watching. Thank you for speculating. Enjoy your farming. May your yields grow every day and have a wonderful rest of your